Hello everyone. In this video 2 of the first module, I'll be talking about risk versus return. Now this is probably going to be one of the most crucial videos in this module, as this is probably going to be your make or break with prop firms or even just trading in general on your own accounts. So we will go over more detail throughout this series about risk and return and proper procedures and just general advice that I would give you guys in regards to proper risk to reward trades when trading on prop firm accounts. So let me just go into our little notepad here, and we're going to discuss the risk and return of a trade. So let's just say, price is trending to the upside and price is currently sitting right here at this level. Okay, and you're looking to place, let's just say in this case, since we're trending up, a buy order. So you want to place a buy at this current price. Now let's just say, based upon your own analysis in the market, you deem that a proper stop loss should be placed right here. And maybe a proper take profit should be placed right here. Meaning, you want to buy price when it gets to this level, and you say that if price were to come down into this specific level, then you want to say, okay, I'm done, I want to get out of this position, I'm willing to cut my losses. If price continues to go long, meaning push higher in your favor, you say at this current price, if this is where you want to put your take profit, that means, okay, I'm done, I want to get out of the trade, I want to secure my profit. Now let's just say, for instance, that the distance between your open order and your stop loss is, let's just say, 10 pips. Let's just call it 10 pips. And the distance between your open order, your buy, and your take profit, let's just say, is 50 pips. Meaning, it is a 5-to-1 risk to reward. You are risking, if you divide your take profit by your stop loss, 50 divided by 10 is 5. Meaning, let's just say you were to risk 1% on this trade, and if it goes 10 pips against you, let's just say the position size that you calculate, that you place into the market, that if it goes 10 pips against you, would equate to a 1% loss on your account. But if it goes 50 pips in your favor, that means you would gain 5%. So you're risking 1% to gain 5%. So that is a very good risk to reward in the market. My rule of thumb is I would need at least a 1 to 3 risk to reward. Meaning if I'm risking 1%, my take profit needs to be at least 3% of my stop loss. So if this stop loss is 10 pips, in order for me to achieve a 1 to 3, my take profit would need to be at least 30 pips. A 1 to 4, 40 pips. And I think you guys understand where I'm going from there. Now, can you have a risk to reward that is less than a 1 to 1, meaning risking 1% to potentially win a 0.5%? Sure, let's just say you were on target right here. Maybe this is 5 pips. So meaning you are going to risk 1% to make 0.5%, because 5 divided by 10 is a half. Now let me give you a clearer explanation as to what this might look like in terms of position sizes, because everyone's going to have different position sizes with your prop firm accounts. So in this case, let's just say you were to have a 100,000 Rand account and you're trading Euro USD. You want to risk 1%, and your stop loss is maybe 25 pips. So let's just go over to AUD CAD. I know this is AUD CAD, but let's just say this was Euro USD. And you want to place a trade at this current price right here, and maybe your stop loss is somewhere right down here. Well, the distance between your open order, meaning if you were to buy it, and the stop loss down here, let's just say it's right there, let's just say that's 25 pip difference, right? Then you would go into what I like to use, position size calculator. You can just type this into Google, put in the currency pair that you're trading. I know it's Euro USD, but in this case, if I were to trade AUD CAD, I would type in AUD CAD here. I'm using ZAR, right, South African Rand, and I'm going to have a 100,000 Rand account, let's just say. I want to risk 1%, and that stop loss distance is 25 pips. I would click calculate, and it would give me the exact lot size to use in order for that if my position goes 25 pips against me. Let me just open this back up. Let's just say this was 25, okay? If it goes 25 pips against me with that 0.23 lot size, then I would lose 1%. So that makes your risk management very streamlined. So let me just get rid of all this stuff here. So if I were to make this 25 pips, right, just like we said, now where is my take profit? Well, the distance between here and wherever I want to get out of the trade, let's just say that's 50 pips, right? So if it goes against me, 25 pips, that's 1% based upon my lot size. If it goes up 50 pips, then that would mean I would make 2%, because 25 times 2 is 50, and that's 2%. So my rule of thumb is I would need at least a 1 to 3, meaning if I'm risking 1%, I would need to achieve at least 3% return for my trade to be worthwhile for me to take. All right, so that is the difference between risk and reward. I would not go over a 1% risk per trade. That is just my rule of thumb in my personal trading as well. And then position size calculator is a huge tool. Very, very highly recommend you use this tool to calculate your lot sizes so that you can properly place good risk management type trades. And you can obviously adjust this. You can make this a 0.5%, 0.25%, 2%. Again, I wouldn't go over 1%, but you get to play around with this and get to see the different lot sizes that you could place. Let's just say I had a R1,000,000 account, and I'm trading on, let's say, GBP CAD, and my risk is 1%, and my stop loss, let's say, is random 36 pips. I'll click calculate, and this would be the lot size that I would use for that particular trade. All right, so risk and reward. Remember, we're trading with leveraged capital here with prop firms, right? That is the ultimate goal, is to get funded and trade with our funds. Right? Leveraged capital. So we do not need to be risking a lot per trade. I would say 1% or less. And then aim for at least, like we talked about, at least a 1 to 3 risk to reward. Meaning, in my case, this would not be good enough. I would need to achieve, maybe right here, for a total of 75 pips, right? Because if my stop loss is 25, my take profit's 75 pips, then that means that's a 1 to 3, because 75 divided by 25 is 3. And that would be a good trade for me. So that's the difference between risk and reward.